Strap in and buckle up because this is going to be one hell of a crash. In fact, you may just want to invest in some extra airbags to cushion the blow. I've got a number of articles here that I've collected over the past month and a half or so, just to sort of give you a picture of how many people are starting to write about this and how big this crash is going to be. This is the end of the global housing boom. So it's just, we've talked about the everything bubble many times, and the real estate is just one of the bubbles in the everything bubble. But when one of them goes, all of them are going to end up going. So here we've got the end of the global housing boom. This is a Bloomberg article, and they've done a good job of making this a global article. They've got London, they've got Beijing, so they've got data on all of this, Sydney, Manhattan, and Toronto. So very global real estate bubble popping here. This is going to be something pretty dramatic. Existing home sales tumble as home buying sentiment hits Lehman lows. So the sentiment for buying a home hasn't been as low since the Lehman Brothers collapse and the global financial crisis. San Francisco home prices soar by a record $200,000 in 6 months. Now that is just absolute insanity. It cannot last. It really shows you that we're at the peak of a bubble. Report signals UK housing bubble burst. Home values fell for the fifth straight month. Zero hedge. I'm showing you this because it's from the Financial Review. So this is an Australian publication. So we're seeing what Australians are writing about the Australian real estate bubble, and Western Sydney showing signs of early loan stress, not quite as alarming as some of the others. The Zero Hedge chart of the day, Australia's record household debt is a ticking time bomb. And the black line here is the household debt as a percentage of the average family's income. But the charts below it are the things that I really want to show you. The bubble there peaked about a year ago. So here's Sydney, and here's Melbourne. So and they've been declining ever since. And so that, it's possible that this could turn around and go back up, but I doubt it, especially because of things like this. Mortgage prisoners totally screwed in Australia as refinance rejections soar. And what you're seeing here is that these are different types of loans, and you can see the legend here. They're not letting people get out of homes that they're not going to be able to afford. If you're trapped, you're going to stay trapped. The banks are going to make sure of that. If you're just getting into a home as a first-time buyer, that's this line right here, or you're trading up into a larger home, they're very willing to trap you into those homes. But if you want to refinance your home, they rejected $30,000 in a month. And if you're trading down into a smaller home, this line, they're rejecting those loans also. So basically, once you get in, and this is by Miss Shedlock. He's a pretty good analyst, so it's worth reading. Mortgage prison. Sydney home prices suffer largest annual decline since 2008. And what I want to show you here is this little piece at the snippet at the very end of it here, where this 13-year-old kid bought a $500,000 home. So there he is, this proud homeowner, and he's, this home, he's going to be underwater big time. So here's a 13-year-old kid that's probably going to be visiting bankruptcy court before he's 15. Maybe they can hang on a little bit longer than that, but by the time before he's 20, he's going to have filed bankruptcy most likely, because he's going to get trapped way underwater. And if he's got a 30-year loan, he'll be from age 13 to age 43. He's going to be trying to dig out from under this giant hole. And I shouldn't be laughing, but look at the smile on the kid's face. Yep, we got into a bubble right at the top. So this goes on. It's our version of the global financial crisis. The Aussies face looming interest-only crisis. And the thing that's interesting about this is that the the Reserve Bank of Australia warned that 500 billion, half a trillion in interest-only loans are set to expire in the next 4 years. There's actually more than that. There's a total, I believe, of $1.7 trillion in mortgages, and 0.7 trillion, 700 billion, is interest only. But half a trillion is set to expire within the next 4 years. And that will cause their payments to jump 30 to 40%. And we'll see a little bit more on that in an upcoming article here. How Australia's banks became the world's biggest property addicts. I like charts because I've often said a picture is worth 1,000 words, but a chart is worth 1,000,000 numbers. It just shows you the trend and shows you which way things are going. And this is household debt as a percentage of the gross domestic product, the size of the economy. And what you see here is that the U.S. and the U.K. are here, and here's below 90%, and here's Australia up at 120% of GDP. That's how much the households owe. And this has some other good things in it. This is showing if you have a mortgage payment of $1,885, once it resets, and these are some that are resetting next year, that can jump to almost $3,200. And then there's other potential rate hikes. But this will play into the coming articles. Australia is the developed world's most China-dependent economy. And the Reserve Bank of Australia regularly cites China's mountain of corporate debt as a major worry. There is an enormous debt bubble in China right now. But I'm going to keep on going down to the bottom here because there's a couple of charts here that I find very enlightening. This is outstanding interest-only loans. So the rise and fall of Australia's risky mortgages. And what you see here is that they were rising. The banks were making more and more and more loans. And then they start falling because some of the loans these loans here that were interest-only became interest and principal. And then if you look over here, this is 30%, 40%, so about 35% or so on the average since 2008 to 2017. 35% of all of the loans that banks were making were interest-only loans, all of the mortgage loans. And then that suddenly just fell off a cliff, and now it's down at 15%. And as loans become tougher to get, that automatically is the pin that pricks the bubble, that bursts it. Australian property industry turns to India to supplant falling Chinese investment. So the Chinese are not going over to Australia and buying as much property. But the thing about China is, Australia is a resource-driven country. They do a lot of mining and a lot of forestry, and China is their biggest customer. And more than 30% of their GDP, I believe, is exporting stuff to China. So that's losing momentum. This video, How China Will Blow Up Australia, yeah, it's a sensationalized title, but it got people to watch it. Now, this is a couple years old. And I had visited Australia, I think the year earlier, or maybe it was just a few months before I made this video. And whenever I travel to and speak in different countries, I learn as much as I can about their local economy so that I can present the audience with information that pertains to them. Everything that I said in here is true, except we had just hit a stock market bump in the road. It looked like the stock market was topping out, and then we had a flash crash in later 2015. And I made that video right after the flash crash. The flash crash, that was really big news then, and people were thinking that the top of the market was in. And, it isn't will this bubble pop, it's when will this bubble pop. And when it does, it's going to be something devastating. This was made almost 3 years ago, and in it, I do say that the bubble it looks like it could be popping now. But the information in here is all very pertinent. And the longer the bubble goes on, the bigger it is and the bigger the wreckage is after it pops. And so I think that something may be, with all of these articles and all of the different evidence from all over the world, I think that this summer right now might be the end of this big real estate boom that has been going on. And if the real estate markets start to implode, that will drag down the stock markets. And this will be a global event. It's something you really need to strap in for. If you've got stocks and so on, I would take a look at your portfolio. I mean, I don't make any recommendations, but I think that it's time to be in a very protective stance, and I think that protective stance can also make massive gains in purchasing power. Right now, I've often said that we're in one of these portions of the cycle where the safe haven asset that people have run to for 5,000 years is simultaneously the asset with the greatest potential gains in absolute purchasing power. So we'll post a link to this video in the bottom of this one, and you can watch that if you want. And thank you very much for listening. This is going to be a roller coaster ride. Try to position yourself so that you're having a good time instead of suffering. Thanks a lot. We'll talk with you next time.